Hey everybody, it's Mike Kennedy, Vermont Bar Council. Welcome to the fourth and final installment in the trust account CLE portion of my garage bar series of CLEs. Doing them from the garage for the past couple weeks in response to or because of the coronavirus pandemic while I'm staying at home like most of you are. Hope everybody's staying healthy, staying positive, being good to each other, being good to yourselves. So I've done several of these, as I mentioned, on trust accounts. This is going to be the last because I don't like doing trust account CLEs, and I think I've got it all covered now. Going to be, I think, about half an hour. We'll do a pre-test before we start, and then do the presentation. Then I'll go over the answers, and then the link at the end. I will give people a link to a Google Forms quiz you can take that will send a response back to you. So you can have it for your records in case you report CLE somewhere where you need proof that you actually participated in the presentation. So while I get my screen ready, share a little story, which I am known to do before I start talking. Just made some coffee because the bar is closed. Because if it was open, that would be inappropriate right now. And I made the coffee. I put in 8 cups of water by mistake. Only meant to put in 4, and I only put in enough coffee grounds for 4 cups of coffee, so it was too weak, so I had to make a new pot. That's my story, tech incompetence. So let's get started. Flat fees, retainers, misappropriation, and scams. Here's the pretest. In general, upon receiving a fee in advance of any work being done, a lawyer must deposit the fee where? Is it in a trust account? In the operating account? Either, and the client gets to choose, or D, either, and the lawyer gets to choose. So what's the general rule in Vermont for a fee paid in advance before the lawyer does any work? Where does it go? Question 2. Under Vermont's rules, there are no circumstances in which a lawyer may treat a fee paid in advance as the lawyer's upon receipt. Is that true or false? Giving you a minute to answer. Not very long. Don't get mad if I move ahead too quickly because you can just pause and rewind. Plus, we're going to go over the answers at the end anyway. And you're not even being graded. Question 3. If a client agrees to a flat fee, the fee is presumptively reasonable under Vermont's rules. Is that true or false? These true-false ones must be easier because you got a 50-50 shot. Most of you know the answers anyway, but those multiple choice ones where I give you 4, then it's a 1 in 4 shot. I'm just mumbling now. What do you think? Okay, of these statements, there's 4 of them, as you can see. It's been a long day, sorry. Which is most accurate in Vermont? Is it A, a lawyer who uses client funds as the lawyer's own will not be sanctioned if the lawyer returns the funds before they are due the client? And I mean returns the funds to trust. Is it B, to be sanctioned for misappropriation, a lawyer must derive a benefit from the improper use of client funds? Is it C, borrowing client funds is as much a violation as stealing client funds? Or is it D, a lawyer will not be sanctioned for misappropriation unless or until the lawyer is convicted of a financial crime? 3 of those are 100% false. 1 is accurate. Which one is accurate? My neighbor's chopping down her lilac trees. She tried to chop down mine too. No, you can't cut down my lilac trees. Number 5, which might suggest a trust account scam? Is it A, a debtor of a client who lawyer has never met magically pays up once lawyer gets involved, and the lawyer has never met the debtor or the client? Is it B, last minute changes to wire instructions? Is it C, a person requests funds by wire in exchange for an agreement to give back or rip up a trust account check? Or is it D, all the above? I remade the coffee. I'm not drinking the one that was too watered down. Question 6, long one, but you'll have time to think about it during the presentation. So this lawyer was 20 when he graduated from Columbia Law School, waited a year to be admitted. 3 years later, gained national prominence for his role as an AUSA in the federal prosecution of the Rosenbergs. The lawyer parlayed that into a job as chief counsel to Senator McCarthy, where he joined Robert Kennedy as counsel on Senator McCarthy's most well-known committee. Later, the lawyer had a long career in private practice. Among others, he represented Donald Trump's business interests and the New York Yankees in litigation that followed the famous George Brett pine tar incident. In 1986, the state of New York disbarred this lawyer for misappropriation of client funds. And there's the connection to this presentation. Also for lying on his bar application and pressuring a dying client to change a will to leave the client's fortune to the lawyer. What a guy. People my age might have learned about this lawyer by listening to Billy Joel's "We Didn't Start the Fire." Name the lawyer. So you'll have time to think during the presentation. Here we go. So flat fees, advance fees, and retainers. What are we talking about? We are talking about any fee that the client pays to the lawyer before the lawyer does any work. We're going to talk about how those fees are handled. There are the rules, 1.5 and 1.15. General rule, and it's been this way since 1999. Fees paid in advance go in trust until earned. Now, a little bit of a history lesson. That was the rule since 1999, and it worked pretty well. In 2005, the VBA's Professional Responsibility Committee issued an advisory ethics opinion. It's there, 2005-4. Again, if anybody wants me to email this PowerPoint to you, I will, so you can have it and have the links. Anyway, here's what the committee said. An advance payment remains the property of the client until earned and must be deposited in the attorney's trust account. Just what the rule said. So that's good. They got that right. They get it all right. The committee also says it's okay for a lawyer to charge a flat fee as long as the basis for the fee is understood by the client and the total fee is reasonable. Again, entirely consistent with what the rule said. Committee says also, if the client knowingly agrees that the fee is earned upon receipt, then the fee is the lawyer's property and as such must not be deposited into trust. So while the general rule and the rule at the time said fee paid in advance must go into trust until earned, the Professional Responsibility Committee issues this opinion saying, unless the client knowingly agrees that it's earned upon receipt. And if it's earned upon receipt, it's the lawyer's, so it can't go into trust because that would be commingling. Again, no problems here. Two more things. First, if the client doesn't agree that it's earned upon receipt, then the lawyer must put it into trust, just like the rule says, and then draw upon it as work is done, or wait until the matter ends and then take the fee out. And then finally, no matter how they label it, whether it's just a normal fee that goes into trust until earned or one that the client agrees is earned upon receipt, the fee must be refunded if it's not a reasonable fee. And so I thought that was great. Didn't get any complaints about it. So from 2005 to 2009, when things started to change, I'm going to get to that in a second, there were no complaints. Didn't get any inquiries about how to handle flat fees or fees that were labeled as earned upon receipt because everybody knew what the deal was. If you label it as earned upon receipt, it doesn't go into trust. If you don't label it as earned upon receipt, it's got to go into trust until earned. So things were pretty good. Then we get to 2009. And the rule got amended, and I don't even know why. The PRB was not involved in proposing amendments back then, but here's what happened. So the quoted language is what the rule was. For those of you who watched the one I did this weekend, the local kids like to heckle me when I'm doing these. They're out there heckling me right now. The language that was underlined, that's underlined and is yellow, was added. So funds received in advance, they go in trust. Such funds are to be withdrawn by the lawyer only as fees are earned or expenses incurred. Now, not a big change, right? Because it's not inconsistent with the VBA's opinion that you can label it as earned upon receipt, which arguably under this language would mean that it's earned. Not so fast, my friends. Here's the reporter's notes. What the reporter's notes to the 2009 amendment say is that no matter what you call it, the rule requires a fee paid in advance to go into trust until earned. See that language? No matter how designated. So we don't care what you call it. If it's for work that is, if it's to be applied as compensation for services that have not yet been rendered, that will subsequently be rendered, it goes into trust till earned. So essentially, the rule change effectively overrules the advisory opinion, which causes inquiries to me to rise. What do you think lawyers wanted to know? You know, now we've said that no matter what you label a fee, flat fee, non-refundable fee, earned upon receipt, it's got to go into trust until earned. So what do lawyers want to know? Well, what they wanted to know is, when is a fee earned? Specifically, when is a flat fee earned? And flat fees, I think, are good. Topic for another day. They can be beneficial to both lawyer and client. Common in DUIs, for instance, I think back then it was probably $1,500 or $2,000 flat fee for a DUI 1 in Chittenden County. And under the old way of doing things, under the advisory ethics opinion, label it a flat fee that is earned upon receipt. The lawyer can treat it as the lawyer's own. Of course, it's got to be reasonable. As the rule was amended, that says, no, we don't care what you label it. It goes into trust until earned. When is a $1,500 flat fee in a DUI earned? Is it after, a little bit after the arraignment, a little bit after the calendar call? None of it until the case resolves. So lawyers had questions, and what they ended up doing was simply leaving the fee in trust until the matter ended. And that, in a way, defeats the purpose for lawyers of using flat fees. So 2015, the PRB is now in the business of recommending rule changes. We looked at approaches that different jurisdictions have taken and recommended at doing what, I think it's either Minnesota or Maine, I can't remember exactly, adding rules 1.5, F, and G. And here's what the rules say. Lawyer and client may enter into a non-refundable fee, labeled non-refundable, as long as the lawyer confirms in writing to the client that the fee is non-refundable, and the lawyer outlines the scope of services that the non-refundable fee covers. So this fee, it's $1,500. I will represent you through a plea in your DUI 1 case, or through an appeal, whatever. You got to specify the scope that that non-refundable fee covers. At the same time, we added rule 1.5. Excuse me, that should say 1.5G, not 1.15. Sorry about that. But basically it says, these non-refundable fees, if you comply with this paragraph, this new paragraph we're putting in, you treat them as your own upon receipt. And because you treat it as your own upon receipt, they do not go into trust. Got it? Because that would be commingling. No matter what you call it, though, a fee advanced pursuant to this new rule, we're going to let you call it non-refundable. We're going to let you treat it as your own upon receipt. Still got to be reasonable. And remember, folks, the fact that a client consents to the fee is not the end, be all and end all when it comes to determining whether the fee was reasonable. So in a nutshell, general rule is in 1.15C, fees paid in advance go in trust until earned, unless you enter into a type of fee outlined in the new rule adopted in 2015, Rule 1.5F, that a lawyer puts in writing to the client is non-refundable and will cover this particular scope of services. If the lawyer does that, the fee is the lawyer's upon receipt and doesn't go into trust. If you're doing a little bit of both, you're calling it a flat fee, but you're not complying with the language in the new rule, but you're treating it as your own upon receipt, you're doing it wrong. To treat it as your own upon receipt, you got to comply with the new rule that requires you to put in writing that it's non-refundable and then outline the scope of services that it covers. Okay, so that's the deal on fees paid in advance. Now, let's get to misappropriation. This should be pretty simple. Don't misappropriate client funds. Oh, there's more though. So here's some reminders. Funds held in trust are not gifts from the client to the lawyer. They are funds to be held in trust. As I've said in a couple of these other seminars, let's keep the trust in trust accounting. They're not for a lawyer, funds held in trust are not for a lawyer to use as the lawyers, even temporarily. Now, remember, I'm talking about funds held in trust right now. I'm off the topic of these flat fees paid in advance that you can treat on your own. We're talking about funds held in a lawyer's IOLTA or a trust account. Some word association with the misappropriation. People often think, I've done this at seminars, they throw out embezzlement, fraud, theft. There's a fourth word that's important to remember when it comes to misappropriation, and that is borrowing. Borrowing is as much a violation of the rules as is flat out embezzlement or theft. Your trust account where you hold client funds is not a pre-approved loan pool for you. They are funds to be held in trust. Like I said, keep the trust in trust accounting. They're not yours to use as your own, even temporarily. So, whatever the reason, when you're holding funds in trust, remember, there is no such thing as borrowing. Doesn't mean if it's even a good reason. You can't take funds out of trust to make payroll, knowing that tomorrow you're about to cash a check in a big case where you're going to get a fee of it that you're going to put back into trust. That's misappropriation. Same thing for your rent, office expenses, loan debt, car payment, your lunch, even your coffee. If you don't have enough money on you to buy a cup of coffee, and you cut a trust account check for the coffee and your muffin, and then you pay it back once you get back to the office, violation of the rules. Okay, don't do that stuff. In my opinion, this is my opinion, when a lawyer uses client funds in trust for the lawyer's own purposes without the client's permission, the lawyer should be disbarred. It's that simple. Even if the lawyer replaces the funds before anyone realizes they were gone, and even if the lawyer never intended to permanently deprive a client of the money. That is, I paid my rent with client funds because I knew that tomorrow somebody was coming in and was going to give me a big retainer, and I'll just take it from that and I'll put it back. Violation of the rules. I think that should cost you your license. And I'm not the only one. So in the legal ethics world, there's a pretty standard definition of misappropriation that dates back to a Supreme Court case, a New Jersey Supreme Court case that was decided in 1979. Here's what they said. Any unauthorized use by the lawyer of client's funds entrusted to the lawyer, including not only stealing, but also the unauthorized temporary use for the lawyer's own purpose, whether or not the lawyer derives any personal gain or benefit therefrom, is misappropriation. And what the New Jersey court went on to say, the presumptive sanction response to that is disbarment. Now, I prosecuted a case in Vermont in the mid-2000s where that's exactly what happened. A lawyer was picked for one of our audits. I'm not going to name the lawyer. The audit revealed, and the lawyer is very candid, the lawyer had been using the funds from client trust to make payments associated with the lawyer's firm, paying rent, paying office expenses, then putting it back as money came in. No client was ever harmed. No money was ever gone permanently. The lawyer didn't even really get a personal benefit out of it, ran the business. A hearing panel ended up disbarring the lawyer, citing back to the New Jersey case that I just mentioned and its progeny, a word I've always wanted to use. I put it in there. All the cases that have come down since 1979 that cite back to that New Jersey case. Our hearing panel adopted that line of thinking, essentially this line of thinking. Any unauthorized use by the lawyer of client funds, not just stealing, but even the unauthorized temporary use, whether or not the lawyer derives any personal gain or benefit therefrom, the presumptive response to that will be disbarment. So remember, client funds aren't yours, not even for a minute. It's not your money. Don't treat it like it is. Or more simply, when it comes to misappropriation, don't. Okay, moving on to trust account scams. Gotta take a sip of my coffee. Okay, here's the good news. Being the victim of a scam doesn't necessarily mean your license will be sanctioned. Here's the bad news. Being the victim of a scam means that money that didn't belong to you is gone. Here's some honest news. Someday, and I firmly believe this, I was scammed is not going to be a defense to the fact that money is gone from trust. So here's why I say that. Rule 1.1 requires lawyers to provide competent representation. Rule 1.15 requires lawyers to safeguard client property. I can construe the two rules as operating to impose a duty to act competently to safeguard client funds. And I think that necessarily includes taking reasonable precautions to ensure that client funds are not dispersed to somebody who they shouldn't receive them, or accessed by someone who should not be accessing them. So to help you, there's going to be a day where a scam results in a sanction. So it's good to learn to recognize trust account scams. It's also good to learn because you want to make sure you protect client funds. So here are some common scams. The first I call the magic payoff, and that's what usually this scenario. Lawyer gets an email, often from someone outside of Vermont, who says, hey lawyer, I'm outside of Vermont. Somebody in Vermont owes me money. Can you help me collect that money? You never meet the person who emails you. You never talk to that person by phone. And I've seen it in several different versions. One where it's a company purporting to have sold something to a buyer in Vermont and they haven't been paid. And I've seen it where they set up even fake websites to make it look like they actually have a company that they tell you they have, that there actually is a company that of the very same name and the same location that they tell you they sold their widgets to. I've also seen it where someone emails you claiming to be a member of the military who's been deployed, whose former spouse was supposed to sell the house and send the marital proceeds following the divorce, whose former spouse sold the house but never sent the proceeds. Basically, somebody out of Vermont who you never meet says somebody in Vermont owes them money. You agree to take the representation. You contact the debtor. Magically, this debt that has gone uncollected, just because you get involved, resolves. A couple days later, a check arrives. It looks like it's on a real bank. You deposit it into trust. Your client that you've never met is so excited, says, keep your full share, send the rest to me. You do. 3 weeks later, your bank lets you know that, oh, that check you deposited that looked like it was real, it was a fraudulent check. Money is now gone from trust that belongs to other clients. I've seen it happen more than once in Vermont. The most I've seen gone from trust is $550,000. The lawyer did not get prosecuted, but the lawyer is out $550,000 that belong to other clients. Be careful. That's a pretty common scam. And I think this is the one that if you fall for, you could get prosecuted for it. Because I think it's such a common scam, you should know better. Another common scam, last minute changes to wire instruction. Doesn't have to be a real estate case, happens most often there, but anytime you are preparing to wire funds to someone from your trust account, and there's a last minute change as to where those funds should be wired, your antenna should go up. These are very sophisticated scams. The scammers are good at making it look like the email address where they send the new instructions to you is from somebody you know, either the other firm you're dealing with or your client. They're also good, and I've seen this, at hacking cell phones or caller IDs to make it look like the phone call with the last minute changes is actually from the person who you've been dealing with. You've got to be really careful. Here's what people suggest. A couple years ago, might have been, looks like 2018, just happened to be looking at Twitter, and some people were at a legal ethics type tech seminar in, I think, Chicago, and I saw these two things come up, and I cannot agree more. The one on the left, last minute changes to wire instructions are a major red flag for a scam. Stop and verify by calling the client or the person who you had intended to send the wire to. The one on the right, you've got to have a two-factor or multi-factor authentication system. wire instructions sent by email, like, hey, an email comes in, send the wire to this account instead of the one we planned to send it to. Double check that in some way other than just responding to that email. Now, this is a quote from Andy Michael, who's state counsel to VATIC. He was kind enough to let me put this in a blog a couple years ago. And you know, VATIC is, for those of you who don't know, Vermont Attorneys Title Insurance Corporation. They obviously title insurance involved with tons of different closings, and often these scams target closings. Here's what Andy said: we are telling folks that the only appropriate second factor authentication method is for the wiring firm. That is, you are the one sending money out. Somebody tells you, nope, send it here instead of where we planned. To initiate a verification call to a phone number that you already had or had already verified. In other words, as Andy says, it is not acceptable to receive a confirmatory phone call or to call a phone number in the email which contains the requested change to the wire instructions. Again, I agree 100% with what Andy says. As the wiring attorney, if you get instructions that are different than what you had planned, you need to initiate the confirmation call to a number that you already have on file. Here are some variations on the change in wire instructions scam. Post-disbursement change. So this happened to a law firm in northern Vermont, dispersed funds at a real estate closing via check. Lawyers on the way back to lawyer's office gets a phone call that looks on the caller ID like it's from the law firm that represented the seller. Lawyer answers, person says, hey, I work at seller's attorney's law firm. You just gave our client a check at the closing. We're gonna rip it up. Can you wire the money instead? Our client doesn't have time to get to the bank. Lawyer says, sure. Goes back to the office, wires the funds. It was a fraudulent phone call. The check gets deposited, the wire hits, the lawyer's out the money twice. Andy Michael tipped me off to the second one, fake payoff letters. You know, where you're the closing attorney representing a seller. Last minute, a letter arrives saying, send the payoff to this address instead of this address. We now own that mortgage. Again, it's very similar to a last minute change in wiring instructions. The scam works in reverse as well, where this one actually happened in Vermont. A lawyer called me, lawyer was representing buyer, and buyer and lawyer had agreed that on a certain date, buyer would wire the funds to lawyer's trust account. Buyer receives an email shortly before that looks like it's from lawyer, but it's not. Buyer figured it out. The email said, hey, there's been a change. Now I want you to send it to this trust account. Buyer thankfully calls up lawyer to confirm the change. Lawyer had not requested such a change. This one actually happened. They've all happened in Vermont. So this happened where a Vermont lawyer gets a call from an out-of-state client who intended to buy a pretty large piece of property in Vermont and said, I just want to send up the money to you now so you'll have it because things are going to happen fast. And sent up something like, I can't remember, it was between $75,000 and $100,000. And lawyer never hears, keeps checking with buyer. Oh, the deal, we're working on we're going to finalize the deal. Don't worry, I'll get back to you when things come together. Eventually, this out-of-state person contacts lawyer and says, hey, the deal fell through, send the money back. Turned out the check that this person had sent as the deposit for lawyer to keep on in trust until the deal was finalized was fraudulent. And lawyer sniffed it out though, thankfully, so didn't end up sending back money that belonged to other clients. Again, I know these sound crazy, but this one happened in Vermont too. This lawyer kept getting calls from somebody and emails from somebody saying, hey, can you represent me? I'm a plaintiff and I'll give you a contingent fee. The lawyer never actually returned the emails, never responded to them. Then one day, a lawyer gets an email purporting to be from another attorney saying, hey, we heard that you represent so-and-so plaintiff. We're the insurance company. We've settled the matter. Where do you want us to send the check? Definitely would have been a scam. Lawyer thankfully sniffed that one out. And then finally, another one, I keep saying it, this one happened in Vermont too. Lawyer represented a plaintiff who settled that, and lawyer settled the action for the plaintiff. Funds came in, they were in the lawyer's trust account. That day, lawyer gets an email saying, hey, excuse me, lawyer sends an email to the client saying, hey, do you want us to send you send the wire to your account, or do you want to come in and pick up a check? Immediately, response comes in, send a wire, but don't send it to the account I told you before, send it to this one. It looks like an email from the client. Lawyer initiates the wire, starts to initiate the wire. Fortunately, at that very moment, client walks in lawyer's door and says, hey, I'm here to pick up my check. Lawyer says, what are you talking about? They figure it out. Lawyer hovers over the some information in the email. Looked like it was from client, but really it was not. So those are just different scams. I know it's scary, but you got to be aware of them. I think the key is whenever you've got a client who you've never met, who claims to be owed money by somebody in Vermont, antenna should go up. Any last minute change to how to wire instructions, antenna should go up. And whenever you issue a check, then somebody wants to rip it up and get a wire instead, or I suppose it could happen with wires too, or maybe not. Just be very, very careful. I'm not the only one who thinks a lawyer who falls for a scam might someday be prosecuted for a licensing disciplinary violation. There's an opinion from the North Carolina State Bar, it's actually 5 years old, that in the end says that the failure to verify a disbursement change constitutes a failure to use reasonable precautions to protect client funds. And that's what I had said earlier, that I think the duties of competence and the duty to safeguard client property include taking reasonable precautions to protect client funds. And here it is. I know that scams are tough to discover or uncover, but you got to be careful, and just blindly abiding by the, hey, wire it here instead of there, someday will not be an excuse. Okay, so let's go through the answers. The general rule is fee paid in advance goes into trust until earned. There are exceptions in which circumstances in which a lawyer can treat the fee paid in advance as the lawyer's upon receipt, and as such it would not go into trust, but that's only if you comply with Rule 1.5F. 3, the fact that a client agrees to a flat fee does not mean the fee is presumptively reasonable. It's a factor that will be considered, but is not the only factor. We actually have a hearing panel decision in Vermont from 2004 that says that the mere fact that a client agreed to a fee does not make it reasonable. In the end, the court decides whether a fee was reasonable. Which is most accurate in Vermont? A, B, and D are flat out false. If you use funds for your own purpose, you're going to be sanctioned, no matter if you return them 1 minute after using them and 5 years before they're due to the client. Doesn't matter if you benefit from misappropriation, you'll be sanctioned. Skipping to D, it is not true that you will avoid a sanction unless or until you're convicted of a crime. It is accurate that borrowing from trust is as much a violation as stealing. All of those, I went through each of them, suggest a trust account scam. If you think you're being scammed, give me a call. We can talk through it. I think it's better safe than sorry, even if a client's mad that it takes a couple extra days to get the client their funds. If you if you think you've been scammed, well, just call me. I have some more to say on them. So I don't want to get off track though. This lawyer, the Rosenbergs, McCarthy Committee, Trump, George Brett, disbarred for misappropriation, was in We Didn't Start the Fire. That is Roy Cohn. Okay, so moving on, the pop culture icon of this segment, it's not Roy Cohn, it's not Billy Joel, but 2 things stuck in my mind as I went through this. With trust accounts, verify. Changes to wire instructions, check for yourself, because disbarment would wreck you. So I'm going with Ronald Reagan, trust but verify, and Ice Cube, check yourself before you wreck yourself. Here's the link to the quiz if you need to answer the quiz and then submit it and get it back as proof for your CLE. There's the Google Forms. I'll leave it up for a bit, or you can just email me and I'll send it to you. Thanks all for watching. Hope to do some more of these going forward. No more on trust accounts. But now I really just look forward to getting out there and getting a run. So thanks everybody for listening. Come into the garage and have a good night or a good day, whatever time of day it is that you are in now. Have a good rest of your day. I'll talk to you later. Bye.